I want to go over the portfolio results in the portfolio calculator through Friday, November the 6th. The top strategy of the week was VSD breakout. I want to take a look here at the results of that. We're going to look at the performance summary. It was a tough week overall, so I want to highlight the best strategy. Went over a lot of the losing trades in the daily videos, but I started trading this one in here, and it's bouncing back. And so looking at ways to incorporate this in the portfolio, it is a long only. You can set it up for shorts too. Format, strategies, and then you can turn on the shorts right here. This uses some volume information that's only available in TradeStation, not in NinjaTrader. And so good trading on the week for VSD breakout. I'm also working on some other beta strategies. Here's a full list. Trying to rework the portfolios. I hate to make a knee-jerk reaction. We're in an unprecedented year, and we've had worst-case drawdowns right now with the pre-election chop. You see stock index 36 is not at a worst case drawdown, but most of the other portfolios are. VIX closed at 24, like we said, the lowest close. And so maybe potentially this is, maybe the markets will return to normal after the election results or the assumed election results. We don't know the future. We're just anticipating potentially a settling down of the market, and it will trade based on stock market information, businesses, economy, and not as much on political uncertainty. And so we have, here's where we are in the stock index 36, sitting on these 3 months in a row of down with more than average chop in September and October. We did see this in 2016, but then a rebound in November of 2016 during the election. Good finish to the year in 2016. So now that we have resolution, in 2020, maybe we will have a more easy to trade market, I guess you could say. Best way to word it, easier to trade. All strategy access 77, sitting at worst case drawdowns 2. Portfolios go to worst case drawdowns eventually, and at higher volatility levels, it's going to do that. So you have to anticipate that. That's why we talk about starting in a drawdown. So if you start in a drawdown, you're okay. You buffer worst case drawdowns for new drawdowns and technical errors. So looking for a bounce in the markets to not necessarily in price, but in price action, and either up and down directions we can trade. I've tested a lot of patterns over the last couple of weeks based on the current market, and a lot of the things that are working really well have never worked before. And a lot of things that have worked forever have not worked that well the last few weeks. And so all strategy access 77 made an equity peak 3 weeks ago. And so it's in about a 21-day drawdown. And even though it was down in October, let's take a look at 2016. In 2016, the all strategy access didn't do much in September, October. That was an election year. Massive recovery in November. So look at this opportunity still. We still have an opportunity in November to return to these levels. Strong finish in November, December of 2016 once the election results were resolved. And so not so sure that it will do the same. There is no guarantee that it would, but it could. And so 2012 were up years, lower volatility back in 2012, and 2008 was a different year altogether. See the final 2 months in 2008, also an election year, were really big. We know how much volatility occurred in 2008 and how it was a bear market at that time. And so, yeah, looking for a rebound in this, just sticking with it. You can wait and see if the market does return, but it could have a sharp bounce back, or you could scale back, or you can hold for that bounce, or if you have the capital and the trading psychology, you could add to it. If you have the capital and trading psychology to step in here and try to trade this bounce, could be a gap either way on Sunday night when the market's open, and you see the 19 system stock index portfolio is at a worst case drawdown. Keep in mind these are leveraged instruments that we are trading, and there are 19 strategies. So each of them only have to go into about $1,500, a $1,500 drawdown. And you're at 30, almost at that 30K mark. 20 strategies and a $1,500 drawdown is $30,000 drawdown. So, yeah, I'm looking for a sharp bounce back. You saw what happened in the end of 2016 in this. big gains at the end of 2016. Recovery once the election was over. How it was also choppy, more so in October than September. And this one was same thing, October up, September up, October down. Same as 2016, September up, October down. And then, if this mean reverts to a big November, December, we're going to have a big bounce back, but that is not a guarantee. There could be some other drama coming out with the election, recounts or lawsuits, I don't know, that could change the results. So we'll see. And we've gone over the 36 system portfolio. 200K portfolio, same thing. Sitting at a worst case drawdown. It's as volatility increases in a year of a pandemic and the probably one of the most contentious elections ever, you see this downtrend in the drawdown curve because of volatility. But we've made equity peaks as soon as this time frame right here. It's always hard to select on those dates, but most recently, within the last, I think, month or so, we could look at the calcs and figure it out exactly. But sharp drawdowns, I like them better than long drawdowns, and so looking for a bounce back. We made a worst case drawdown in here in the pandemic, and I think that was in May. Yeah, in May, and then we bounced back, and now we have another worst case drawdown. So we'll see if we bounce back post election, and let's look at 2016. What happened? September, October were not so bad in this portfolio in 2016, and then November, December, big months, 5-figure months. And so if this ends up being a positive 5-figure month, that's a $20,000 reversal roughly. So could be a good month, good time to get in and take advantage of a complete reversal in price action now that the market thinks it knows, or it can anticipate certainty of what to expect in the next administration's policies. 2550K portfolio, one of our stellar portfolios, up on the year, down the last 2 months, steep drawdown in October, brand new worst case drawdown as well, and just fast, really furious, really challenging market conditions. Just a big dump. All the patterns were off in all the markets, and we had a little bit of a $900 bounce back from worst case drawdowns on Friday, and looking for a return. What did this one do in September? This has a list of strategies. It only has 10 strategies, so it's not completely representative of all of our portfolios, but November, December of 2016 was up, and so let's look at the micro stock index and gold portfolio. It was one of the strongest portfolios because it didn't make a worst case drawdown until yesterday. And so this worst case drawdown is not as bad as the others. So it's one of the stronger portfolios. If you want to get in on this, now is a good time to get in a worst case drawdown. Let me know as soon as possible, and we could potentially have a huge bounce back. 2016. This is trading one micro on 52 different strategies, so $6,500 between now and the end of the year would be a nice gain per micro. You're trading 5 of those. That could be 30K. Again, that's past performance, and so we can't guarantee any of that. And future performance, there could still be more chop. There could be something else that comes up that we don't foresee that could change this, but we manage risk, and this is where we are. If you get in you wait for a drawdown to get in. If you got in here, we could have a huge bounce back, or it could continue to chop. And so either way, you're managing risk, and your stop loss point. And I'm also looking at updates for all of these portfolios for 2021, maybe even by December. It takes a long time to figure this out. You don't want to have knee-jerk reactions and change things too much. So all these are up on the year. They did pretty well through the pandemic, but are struggling right now. This is a normal drawdown. The liquid day trade we're at the 100K day trade. 100K day trade is not at a worst case drawdown, and it's been here for a while. It's been going through these type of drawdowns for a while, so this is fairly normal for the liquid day trade program. It recently had equity peaks as well over the past couple of weeks, and then just got slammed this week in this ultra choppy trading liquid day trade portfolio. made a worst case drawdown this week, and so we've had this, and part of that is SR counter trend. So this is a long drawdown. Liquid day trade's a long drawdown. The length of the drawdown is high, and it's really correlated with the SR counter trends, which we'll go over next. SR counter trends are up on the year, but at worst case drawdowns, huge January, February, March, but just since the pandemic have really underperformed, and just really trying to resolve this, trying to find the best way to trade this going forward. And so I'm glad we had a good, strong first quarter on these strategies. Seeing if there's some resolution to this, or if we need to adjust these a different way or adjust some strategies. Staying up really late, studying these markets, looking at more beta strategies. I want to show you some other strategies for 2021, and I'm going to go over that next. But these are the latest portfolio calculator results. You can download those. Now is one of the best times you can get in. We always say that on a drawdown. We tell you when there's drawdowns. We tell you when there's equity peaks. And it's hard to find worst case drawdowns to get in on. It's hard to find, when the portfolio is doing really well, you root for a drawdown to maybe get in, and then when it has one, you're not always sure. But now that some of these have drawdowns, could be a great time. Stock index and gold portfolio is one of my favorite. This says micros, but you can trade the minis on this as well. And you just multiply everything by 10. Multiply everything by 10, and you have it on the minis and regular gold contract. So next, I'm going to go over the beta strategies in the next set of beta strategies that we're looking at for 2021. So if you go to my website, go to calculator, you can download this Excel portfolio calculator. Download portfolio calculators updated through Friday. You can look at all the latest results. You can customize it yourself. Watch this video. You'll learn how. If you don't have the newsletter, sign up for that. And so that is the portfolio calculator. These are all the beta strategies for 2021 that we've looked at, that we've introduced to you. VSD, NQ, definitely want to look at that one. Gap continuation 2019 with the bigger stop loss. It's kind of gone flat lately. This one has done well. VSD breakout, we already talked about that. And so these are a couple of my favorite, the VSD and the gap continuation 2019. And I want to show you some other. So here is tick wave, looking at the waves of the NYSE tick in relation to stock indexes. I've been researching this. It's kind of had a choppy equity curve lately, but it's broken out and actually did well this past week. NQ breakout takes long and short trades. Fairly similar to gap continuation, but slightly different. Takes much fewer trades. And since 2017, you see 127 average trade profit. It has 30,000 on the long side, 16 on the short side, but the average trade profit for each is about the same. I love the symmetry there. It's done better on the long side because we're in an uptrend. And then VIX OC, VIX on close, very low frequency strategy for the VIX. We've talked about trading the VIX based on closing values. What this one does is it looks at the close and then gets in the next session. And it uses a stop order, and so I still have to resolve some order entries on that, but great equity curve, very low frequency. And then VSD dynamic, one of the latest. This is long only. There's some positive on the short side, but it just doesn't trade much on the short side. And there is, since 12/31/2018, very nice results. Nice results here. During 2018, we had a lot of bearish price action, and so it didn't do as well there. But here are the results. And so if you're just looking at this as a new emerging pattern from this time period, let's look at 12/31 format symbol to 12/31/2018. It's hard to justify a strategy with a $25,000 drawdown sometimes. But if you're looking at it on a short period of time, you say, okay, I'm willing to risk a $6,000 drawdown. This is without slippage and commission. No slippage and commission here. So 106,175 in the last roughly 2 years, $6,000 drawdown, 1769.58. Beautiful equity curve, and once again, very short term, very short term. So, and it is long only. So that is my only skepticism of this strategy. And we could maybe work it on the short side if we ever go into a bear market. It's tricky to know that. Like I said, the market ought to be more bearish, but with all the money printing And potential stimulus, it's just going to run and run and run right now. So that's the long video update for the weekend. And once again, this could be a great time to start a portfolio in a drawdown.